Welcome, everyone. My name is Alex. I'm joined here today with Emily. We're here to talk to you about tying the financial knot. Obviously, as you know, you're newly married, moving in together, starting a family. There's a lot of different financial questions that come up. Our goal today is to provide you with some information to just make those questions a little bit easier to answer. So we're going to jump into some slides. We have a great presentation for you tonight, and look forward to following up with you after the presentation. Here's some disclosures.
Awesome. So love to start out with what is your money personality? Alex, do you know what your money personality is?
I think I'm the banker.
The banker. I think that to have this job, you have to be the banker a little bit. So I'm also the banker. Don't feel bad if you're not the banker. You're probably not. That's why you're tuning into this tonight. But, so there's a lot of different, everybody comes into a relationship with a different personality around money. Most of it comes from how you were raised. And how money was spoken about or handled in your family as a kid. And so it's really important to recognize that in a relationship, you're going to have two different personalities. Just like you have your own personality, you've got a money one as well. And so recognizing that, talking about that, super important for your marriage, your family. But here's just some of what the different personalities are. So you've got the spender. I do feel that no good relationship exists without a spender. I don't know about you, but this is the person that, cash burns hole in their pocket and they love to spend and live a good life. Like, that's not always a bad thing. That person might enjoy life, a lot more than maybe the banker who's always looking to save. So the banker is the person who, probably has their Excel spreadsheet going and knows where every last dime goes, and is always, future thinking. How are we saving for retirement, saving for the kids and all that. The what's next. So this is your entrepreneur, maybe that person that is always trying to figure out, okay, maybe what am I spending on next? Or what is, my next set of income? We live in like the gig economy. So a lot of people work in that way too. Some people would be very uncomfortable in that type of money personality, but it works for a lot of people. And then the last is the hustler. This person will do anything that they need to do to make money, maybe within reason. But hey, if say they had to change jobs or something like that, like, doesn't matter to them. They will make money. They will hustle. They'll grind. They'll continue to earn in any way that they can. Those people tend to be, can kind of fall on either side of being more frugal because they want to hang on to their money, or, they hustle really hard and they have that work hard, play hard mentality. So, depending on who you are, doesn't matter. They all work. Just depends, on how your spouse looks too from a money personality, and making sure that those two jive together. Because the biggest thing for people is that, oops, let me change the slide. Oops, sorry. Go ahead. Is that, money is one of the biggest things that couples fight about. And so this is just an old quote from the Wall Street Journal. And, it couldn't be more true. I think as Alex and I, have each gone through life. So just a little background, like, Alex and I each got married in, I guess, like in the same year. We had like kids that are roughly the same ages. And so kind of we've been doing this a while now. And I think that, in transitioning from talking about money personalities, like how it actually impacts you and your family, it is so important that you have these conversations. And I hope that, as you watch this, you're sitting there with your spouse, and so that you can have very open and candid conversations about money. So don't let this be you that, one of the biggest reasons people fight is about money. You can still fight about it, but you got to come out and, hug it out at the end of the day.
Just like everyone likes to say, communication is key, especially around your finances.
Yep.
Awesome. So getting into the meat and bones of our presentation tonight, when it comes to finance, we all have common goals, right? We want to be able to save for retirement. We want to be able to stay out of credit card debt. But there's not always an easy answer, and it doesn't always come easily, right? There's so many different financial decisions that we have to make, specifically as a couple, when we're first starting out. I'm sure you guys are familiar with them and have experienced some of them already, maybe student loan debt, taxes. It's tax season right now. Make sure your taxes are filed by April 15th. But as you're newly married, do you file jointly? Do you file separately? College, maybe, kids are on the way and you want to put a college fund together for, your kids or future kids. And then everything else that comes into it. I mean, you see TikTok now has all these different influencers with all this information pertaining to finance and taxes. So it's hard to, make sure you're making the right decision because there is so much information out there.
And this is just like, I love I love to hate to look at this slide because this is what life really is for most of us, which is there's so many questions. You can't just Google this or ask AI or whatever. I mean, every individual is so different that it is overwhelming. This guy's head is red in this photo because he's very overwhelmed by all these questions.
Absolutely. So, how do we manage it, right? So, we're going to always continue to have these questions. How do we manage it? So, with working like with a financial advisor, me and Emily have been doing it for quite a while now. We like to take our clients through a process and we like to just, spell it all out for them and get them into a good structure, so that they can easily answer these questions. And, if some of these things that are, in this right side here make sense to put in place, can be put in place at some point. So we like to break it down into 4 different steps. One, protecting your todays, right? So basically what that means is everything that you have worked for already and everything that will, be earned or invested in the future, we want to make sure that is protected for you, right? If we can't protect what you have right now, what you may have in the future, how can we build any other building blocks, say investments, retirement, college funding, whatever the case may be? So, through different insurances and different strategies with, estate planning, we want to make sure that those types of things are protected. The next step here is, once we protect your todays, we want to make sure that let's save as much money as possible so that you can be in the best situation as possible in, both the short term, the midterm, the long term, and, far through your life. So we'll walk through with you on, different strategies as how to become a world-class saver. Third, so life event funds, right? So life event funds, those are typically like your different buckets of investments. We'll show you, what makes the most sense given your, certain position in life and, walk you through the future potential of what those investments can turn into, over the course of your life. And then lastly, we want to talk about living debt free. Obviously, like, that's a pretty common one. Student loans, credit cards, mortgages, car payments, all those different things have a big impact on our ability to save money and our ability to grow money in the future. So we just want to make sure we are as efficient as possible there as well. So if we can have all those steps, somewhat structured correctly, that will create financial balance. And, that's our goal. When we work with a client, we want to make sure that you have perfect balance and, you guys can be performing as efficiently as possibly from a financial standpoint. Right.
Going to optimize your financial life.
Exactly.
We like to use that word a lot here. So the first thing that really getting into it, the step one would be, as Alex said, protect your todays. So if you want to protect what you have today before we build this perfect balance sheet, it's, when people come to us, a lot of times their first thing is like, okay, what am I doing in the stock market? Right. That's the fun stuff. Before we jump into all the fun stuff, we do need to kind of like lay some ground rules and make sure that you have everything that you've worked so hard for up until this point, that if anything were to go awry in your financial life or in your personal life, that it's all well protected. So, speaking to this, tying the financial knot, and like you may have recently gotten married or thinking about it or having kids, like there's a lot of different changes in your financial life right now. And a lot of that actually will, require you to relook at all your different layers of protection. So, I like to kind of start from the bottom up here, which is your wills, your trusts. So your estate planning. Estate planning is huge for where you are in life right now. First thing, the easiest thing, make sure all your beneficiaries are updated. So whether it's your benefits at work, so you probably have, maybe some life insurance, your 401k, everything should make sure it reflects who your beneficiary is that you actually, want the money to go to. I can't tell you how many times I'll meet somebody who's been married for like 10 years and their brother is still their beneficiary on their 401k.
Yep.
And we have a nice, laugh about that. But seriously, you want to make sure it's all right. Then you want to sit with a good attorney and get their advice on what you should do around your estate planning. We'll work hand in hand with them. But you need to make sure you have a will. Each of you needs a will. If you have kids, you need to make sure that you have a guardian within that will to make sure that if, God forbid, you both passed at the same time, who the kids go to. You don't ever want to leave that up to anybody else to decide. You want to make sure you decide that. Don't let that be a reason that you procrastinate in getting the will done. The next thing would be a power of attorney. So this is somebody who makes financial decisions on your behalf if you can't. Typically, it's, a lot of times it's each other, and then you pick somebody as a backup. And then a living will, healthcare proxy. If you can't make any healthcare decisions, who does that for you? So those are the three documents that you typically see an attorney can help you out with. And so, that would be from an estate planning standpoint. The next would be your liability insurance. So auto, homeowners, umbrella. So your auto, getting on the same policy, a lot of times you get a discount for being married. And you want to make sure that you have good auto insurance. I find that when you're young, you typically say, give me the cheapest thing out there because I'm broke. As you start to build assets, you want to make sure that you actually have a policy that's going to cover you. God forbid you got in an accident, and cover the other person if there's any medical expenses or anything like that. So make sure you visit that, and visit it every couple of years, because those premiums tend to go up without us noticing too much. And then they get a little wonky, and you can kind of just keep tabs on it. Homeowners, a lot of times homeowners is really dictated by the mortgage company to make sure you have the right coverage there. You just want to make sure you know what's covered. If you have like jewelry and all that kind of stuff, make sure that you are putting everything you need to on those policies. And then last is an umbrella policy. A lot of people don't know about umbrella policies. They're very simple. What happens is that you actually have your auto and your homeowners will cap out at a certain number. And so say it's, 250,000 per person if there's an auto accident. And umbrella policy sits on top of that. And so when that sits on top of it, what we mean is that if you were to ever get sued and it was for over 250, your balance sheet could potentially be on the hook. All those really fun stocks and all that we worked so hard to build for you could, be gone in an instant if you don't have the right amount of liability coverage. So umbrella policies are super simple, straightforward, cheap, and you just get it to go over top. Next would be disability coverage. So, when we look at our clients and how much they're making, and in this phase of life, you have a lot of years to go. So if something happened and you could no longer get up and go to work anymore, you are your biggest asset, not your house or your car or anything else. 401k, not, the assets on your balance sheet are not nearly as large as they will be in the future. And they're going to get bigger because you have the ability to earn money and save it. If you have a disability and you can't go to work anymore and earn a paycheck, or have to change jobs and not work as much like you did, and can't earn the same amount, that is like a financial catastrophe. And so making sure that you have the right disability coverage, whether it's through work or individually, or a lot of times the mix of both, and make sure you know how it works. A lot of time work policies cap out. They don't go with you if you change jobs, or if your company's paying for it, then it gets taxed if you ever, went on a claim. So make sure you know how it works and that you have it. Lastly is life insurance. You're here because probably you have somebody else in your life, right, that also relies on you, and maybe multiple people, right, if you have kids. And so this is a serious one. You need to make sure that you have the right amount of coverage. My view of life insurance is that if I wasn't here tomorrow, hopefully my family would be a little sad, but I wouldn't want them to have to deal with the financial side of it. Everybody knows somebody in their life that this has happened to, and it's horrible when, all of a sudden you're seeing like a GoFundMe page because somebody was underinsured. Don't ever let that be you. Make sure that you get the right amount of coverage, the right amount of death benefit, and then the right types as well. And so that's something that, your advisor or whoever you're working with can guide you there. But really making sure that you take a look at that as people seriously start to rely on you and your income.
Absolutely.
All right.
Cool. So after protecting your todays, we'll talk about, how can we become a world-class saver? So I'd like to kind of just like bring to light, what the real cost of living is and what does it look like? So what we go through during life is, we have all these financial decisions to make. We kind of talked about them in the intro, but there's taxes that come into play. There's inflation that comes into play. There's product wear and tear, new inventions, approved living standard, life events, right? When you're getting married or recently married, having kids, these all mean like serious things to you and have a serious impact on your overall finances. So, just to touch on each one of these a little bit more. So like taxes, right? Like when you become married, you now have a choice to file jointly or file separately. There's different tax credits and deductions that come with each. So you definitely want to work with your accountant there to, run the numbers both ways and make sure that you're making the right decision in terms of how you file. Product wear and tear, right? Who gets a new iPhone, every couple of years when they come out? Who is a victim of
We don't, because we're bankers.
Well, sometimes, right?
Sometimes you have
the iPhone, the battery life doesn't work after a few updates, right?
Yep.
The charge used to last for a whole day, maybe even longer. And now by the time 3 o'clock, 4 o'clock runs around, you got to find that charger.
Same thing with the watch. They do that with
Yeah,
these
I know.
watches.
Planned obsolescence, they call it.
Yeah.
And then obviously cars, your major appliances, things like that. Things are going to break and things are going to get old and things are going to need to be updated. So if we don't have the right amount of savings set aside, then, it's really going to eat into our finances, maybe even cause us to go into debt. So we want to make sure that we have the correct, savings and emergency funds there for when those things do happen. Inflation. So I'm sure you are all well aware of, I don't know if you looked at your gas bill this month,
Or
but
the grocery
or the
bill
grocery
or
bill.
any
I
bill for
mean,
that matter.
it's scary. Again, right? Like things will always be more expensive in the future than they are today.
Mhm.
And we need to, factor that into how we plan our finances. So just making sure that we're aware of that, conscious of that, as we save money. As we earn more money, we do see salary increases, or as we're more experienced, maybe there's more commission if we work in a commission-based job. Um, I think everyone is guilty of, wanting to improve their living standard, right?
Mhm.
Maybe a nicer car, bigger
Yeah.
house. All of those are warranted, and you should be able to do that. But we do want to make sure that the right savings and the
Yeah.
right amount of cash flow is there when we take on these bigger car payments, bigger mortgages, whatever the case may be.
I find that you have more confidence in making those decisions and upping
Absolutely.
your lifestyle when you have a plan and a strategy that like, okay, but I am saving enough for retirement or for my kids' college or whatever it might be. I have enough in my emergency fund, so I can go get that nicer car or bigger house or whatever it is.
Absolutely. Yeah. I think being, this world-class savings is, when you do have that confidence, it just makes life and, being married and everything else a little bit easier.
Yep.
Because money is, it can be a very stressful thing. And then there's a little last box here in the bottom right, life events, right? So these can be great life events, maybe college, maybe starting a business. But there's, also negative life events that occur as well, maybe a disability, like Emily said. So having the right type of savings and right things in place for when those life events happen, we'll work with you to show you how to make sure that you have the right amount of money in these certain buckets for all these different things that it can impact your wealth building. So what's an optimal saver, right? Kind of a general question, but in our strategies and the conversations we have with clients, we like to look at how can we get you to saving 15 to 25% or even more of your income. Um, you know, there's different ways of saving, maybe 401k right from your payroll, maybe you force your savings into, a savings account as it comes into checking. But what will work with you is how to come from, maybe not so optimal of a saver at 5% to saving over 15% of your income each and every year. So, obviously, we kind of just touched on it in the last slide. What deters us from saving 15 to 20%? Obviously, we all want to be able to save as much as possible, but those things we talked about in the previous slide, overspending, technology, keeping up with the Joneses. Maybe, Emily got a new car, so now I need a new car because I want to be, on the same level, right? That thing is real. We laugh about it, we joke about it, but
Especially with kids, I think it's very real.
yeah, right. We need the nicest stroller, the, whatever, the nicest clothes, all
That they
those.
grow out of in 2 months.
Exactly, right? The Nike shoes. There's an endless amount of things we could talk about there.
The
Um,
home
the
improvements.
home improvements,
Yeah.
right? 25 toys for Christmas instead of 10, stuff like that. But in all seriousness, those are the things and those are the decisions that we have to make to, keep us at optimal saving. So a lot of people, when they save money, at least from our experience, is first what happens is their paycheck comes into their checking account. They spend money on their bills and, groceries and things of that nature. And then whatever's left over gets saved. Now, some months, if it was an expensive month, maybe we had to go to some weddings or, maybe on more than one vacation, there's not so much left over to save. So we've actually, created a process for saving first and making sure that that savings gets done. We basically just flip the way you do earn and spend and save money. So if we could have that money in our checking account be saved first, and then more freely spend whatever's left over, you're going to have a much better result on the overall amount you find yourself in savings. And we work with clients on this exact strategy. So there's different accounts that we can set up that are basically just a separate checking or savings account where maybe we now put your direct deposit from work into this account. We'll send you, an allowance, so to speak, to pay your mortgage and all those other fun bills that are fixed. And then we'll save a lot more money in the long run because we were able to pay ourselves first before paying for, those ancillary things that come up and are in our life.
And it sounds so like rudimentary,
Yeah.
but it's so impactful for people because you really have to intentionally spend rather than be an intentional saver.
Yeah.
Right. Think about it. If you had, a lot of times when we first meet a client, one of the questions we ask them is, what's your process for saving? And other than like a little laugh that they give back, they're like, yeah, right. They come up with some kind of crazy strategy, or I direct deposit $50 here and there, or like, no, I move it over at the end of the month when I hit this amount. And I don't know about everybody out there, but I think I speak for all of us when like life's too busy for that. And so I think it's just so much easier to be like, here's roughly how much I spend in a month. And anything over and above that, let's just auto save it. So it's like putting a filter on your checking account. And then you never have to think about it. What you do have to think about is when you run out of money in the checking account and you're like, oh man, because we get this email from our clients that do it. We call it the I'm sorry, but email, which is, I'm sorry, but I need another X amount this month because my credit card bill was high. And they think about it. And there's a lot of psychology. I feel like maybe at least half of our job is psychology. And so, when you have to admit that maybe I overspent this month or something like that, you have another person in the ring with you that's on your side, but you're a little bit more accountable to spending. It's so helpful for being a great saver.
Absolutely. And I do this specifically myself. And what I like about it is that I feel more comfortable about the money that I do spend because I know that I'm saving first and doing the right things first. And hey, whatever's left over in the checking account, I can be like, oh, I do have an extra $100 or $200 to go out to dinner or whatever the case may be. So that it takes the guilt out of enjoying life. So highly, highly recommend it. And we'll obviously work with you there to put this structure in your savings. Cool. So the question I would say we get from newly married couples is, how should we do it? Should we have joint accounts? Should we, pay each other through Venmo? Should we, have separate credit cards? Every situation is specific. So we are talking in generalities today, but everyone's situation is specific. Like me and my wife, we have separate checking accounts and, I pay for stuff and she pays for stuff and it all kind of just works out.
And we do everything out of one account.
Yeah. So, right. So
I'm just like, oh, that sounds complicated for me. Let's just put it all here and do it that way.
So, we've said it a couple times already tonight. Communication is key. So, whatever works best for the way you want to structure it. There's no wrong answer. There's no right answer. But as long as you both are able to communicate, what is being saved, what is being spent, that's what I would say would work best. So, you'd obviously want to give this a lot of thought and have that conversation with your partner to come up with the best strategy there. Cool.
Awesome.
Life event fun.
Yeah. So step 3, making sure you account for life events. So as Alex mentioned, life events can be good or bad. We hope for more good ones than bad ones. But, one thing that really sets people back in their financial life is not being prepared for those life events. So here's, some examples for you. Loss of a job. This one is huge. I feel like in the last 5 years since COVID, you're seeing tons of clients that, were doing really well all of a sudden be hit with these mass layoffs or, really started in that 2020 COVID realm. And so being prepared that if you lose your job, you're okay because guess what? Unemployment check is not coming the next day.
No.
If you've ever had to file for that, months you're talking. So you want to make sure that you're prepared there. Having kids, making sure that you've signed up for your short-term disability or all that kind of stuff. Those, again, they take long to come in. And so make sure you do preparing for all this type of stuff in advance is so important. We're part of this sandwich generation too. Our parents are getting older. we have children to take care of. That's
Mm.
that sandwich. So you're really being that caregiver across the board for
Right.
the generation above and below. That can impact you financially. Even if, say, your parents are well off and their care is paid for, you're having to take off of work for, doctor's visits or doing their grocery shopping or whatever it might be. It's not just a mental toll, but it can
Mhm.
also be a financial toll for you. Saving for education. I where I went to school, I found out what it costs today, and I was totally blown away.
Mhm.
More than double what I paid.
Absolutely.
And I think we don't know what that trajectory looks like. We want to be flexible around education and not lock up all of our money just for that one particular life event, especially because we don't know what it'll look like when all of our kids go to school. But being prepared for it one way or the other, it's going to cost money.
Absolutely.
So, and it could be a lot. So we want to be careful there. Natural disasters, making sure not only you have the right protection there,
Mhm.
but not everything is always covered if something happens. We live close to the beach, got hit hard by Hurricane Sandy several years ago. And, if you didn't have money in the bank and you were waiting on insurance checks to come in,
Mhm.
again, months or years if you're fighting with them back and forth. So you got to be prepared for that. Weddings, we're kind of like on maybe the tail end of this
Yeah.
now, but I remember, how many bachelorettes, how many weddings,
Mhm.
you're giving gifts, you're staying the night,
Yeah.
all that, the shower, everything. So, making sure that now I guess we're flipping into our kids will get married one day and
Yeah.
all that kind of stuff. But you just really want to make sure that it's not just that monthly spend number. There's so much more out there that we're going to have to deal with. But here's what happens is that when we meet somebody, so Alex and I do like an intake form questionnaire, and
Mhm.
so many times what we'll see is that somebody actually has all their money. They've been a diligent saver. They love that 401k, and they're like,
Mhm.
I'm doing great financially. I maxed out my 401k. And
Mhm.
I'm like, that's great. I'm so glad that you're saving,
Right.
$24,000 a year. That's
Yeah.
awesome. Let's talk about where it's going because maybe the bank account is looking a little shy these days, or maybe we see this a lot. There's credit card debt, and
Right.
then but the 401k looks great. So we want to make sure we're saving in the right time frames. So what happens is that we'll see most people putting all their money long term
Mhm.
because if you think about it, like that's what's ingrained in our brain. When somebody thinks about what we do for a living, most of the time they think retirement planning.
Right.
It's like, well, let's not jump to the end of the show just yet. There's a lot of life that has to get lived between now and then. And so we want to make sure we save in the right order. So that short-term bucket gets filled first. Uh, you know, People used to say, have 3 months of your expenses. I don't think that 3 months of your expenses is enough to have accessible to
Mhm.
you. Sometimes people want a year's worth of their money in cash. It's going to largely depend on what your job is,
Sure.
the stability of it. But you do want to make sure that that short-term fund is taken care of. And you're always, putting money in there as well because, hey, you need new tires and things happen and you use that money every now and
Mhm.
again. That midterm bucket, that could be available for opportunities, could be available for things like college, like anything that would say, the next 5 to 15, 20
Mhm.
years, there's a lot of life that will happen there. So make sure we've saved for it. Things like Roth IRAs, cash values of life insurance, brokerage, investment accounts, things like
Mhm.
that can all be tapped into. And so that's where we would look to save things. That
Absolutely.
might happen in the midterm. And then what we don't spend there can then just get shifted to be long term and join up with your 401k, 403b, things like that.
Yeah, and I'd say all these different, investment vehicles work differently. So it's nice to have some balance. Like your 401ks, normally invested in the market, in mutual funds. So, we don't want to have all our eggs in one basket. We do want to have some balance or, some uncorrelated assets that aren't all subject to whatever the market is doing in that given year or, time frame there. So, yeah, all great information there. Cool. So step four, living debt free, right? I feel like debt is just part of everyone's life. Obviously with student loans, mortgages, car payments, credit cards, it's inevitable that at one point, we're going to have to make a decision about debt. But not all debt is bad, right? Mortgages, right? If, you're lucky to own a house during COVID or around COVID, your
Yep.
mortgage rate might be under 3% for a 30-year fix, right? I don't know if we'll ever go back to those times again.
I hope so.
I
I don't
hope so
think so.
too. I just
Not in
bought
the
a new
near term.
house. So
Yeah.
yeah, I'm really hoping for it. But yeah, I mean, a mortgage interest rate now is up to 7%. In the grand scheme of things, it's not terrible, but it's not 3% or less than 3%. So There is some tax deduction of the interest we do pay on mortgages. So there is, discussions and conversations we can have around mortgage being good debt, but we do want it to be in reason there. Short-term debt, I would say that is normally bad debt, right? So credit cards, if you've looked at interest rates on credit cards, they're mainly all over 20%, sometimes even more.
I don't know about you, Alex, but a lot of times I hear from clients, that sometimes people come in with credit card debt, and that's okay. We can help you clean that up.
Yeah.
But they'll say, yeah, but I'm doing it for the points. And
Right.
I'll remind them that like
Yeah.
if you're not paying the balance off in full every single month,
Hmm.
you're paying for the points.
Yes.
You're the person out there funding everybody else's points by
Yeah,
paying all this interest.
absolutely.
So making sure that like pay it off in full every single month. If you need a strategy on how to do it, that we can certainly help with that.
Yeah, I'd say that's one of, the areas of finance in which we really help our clients, just restructuring your debt to make sure it's as efficient as
Mhm.
possible. The money that goes out the door on interest these days is insane. So if we are able to fix that and recapture that for you and put that back into different investments or savings or whatever the case may be, that's how we become, a bad saver to an optimal saver. 5% to 15% could easily be done with, a debt restructure. So if that's something that, you're facing or going through right now, definitely reach out. As, we have a lot of experience in, kind of restructuring that for you. So this is a cool slide. So like a lot of people, kind of like what Emily was just referring to with the 401k, right? When we first meet with a client, clients typically do the easy stuff first, right? So the easy stuff could be 401k through payroll deduction. You sign up through it, you might get an employer match. You're like, oh yeah, we're definitely going to do this. So if you're putting 8% in your 401k, maybe that's getting some, rate of return on it as well. But because you're putting so much in your 401k or illiquid investments, you're racking up credit card debt, and that credit card debt is costing you 18%. You're not actually positive, right? You're just kind of increasing the credit card debt and you're not increasing your savings by as much. So you're actually going backwards there. So we definitely want to be conscious of that and make sure that that's not the case. We can easily move things around to, get that short-term debt out of the picture as fast as possible, because that will be a huge drain on our overall finances there.
And Alex, the reverse a lot of times is true too, where we meet somebody who has a bunch of free cash flow
Mhm.
and now they're prepaying their 3% mortgage.
Right. That's a great point.
Right.
Yeah,
And so it's
absolutely.
like, well, if I can make, X amount over here, even if it's the same,
Hmm.
3%,
Yeah.
I'd rather put my money into a liquid asset that I can use for opportunities or anything like that in the future. And that's going to compound on itself and grow
Hmm.
rather than prepay a really low interest rate debt.
Great point there. So car ownership, this is kind of an easy target. Most of us either lease or we own or we have, financing our cars. The price of your car over time isn't just, what your car payment is, right? There's an actual like time value of money and an opportunity cost because that money could have otherwise be invested elsewhere and potentially get a rate of return. But, I think it's just the math comes out where if we had about a $600 per month, or maybe 6,000 per year payment on a car, and there was a 6% interest rate on that, what that equates to over 30 years is $1 million of car payments. That's kind of an insane number when you think
Yeah.
about it. That $1 million with the interest and the payments as principal is coming off your balance sheet, because of that time value of money. So we always want to make sure that we're making the right decisions from a car financing or leasing standpoint. There's a lot of interest rates are high right now, but if you do have good credit and you would like to look at, newer cars, I think you were just going through this example
Yeah.
yourself. There are now dealerships that are offering low interest just to get some cars off their lots. I think there's BMW, one of them offers like potentially a 2% interest rate right now on, financing a car with them if you have good credit. So always be, aware and look out for the different deals that the dealerships have there. Look into leasing sometimes if you're, a low mileage driver year after year. Sometimes that could be a little bit more affordable than having this car payment. So, again, just be conscious of it, ask us, and we're happy to kind of go through that exercise with you to see that you are making the right decision there.
And if you're going to buy or, when you think about these consistent car payments in this example of $1 million, that really strikes
Mhm.
me. It's like, you don't always have to have a car payment.
No.
right? So buying a car and holding on to it, like you
Mm-hmm.
can drive it for more than 3 years
That's
or
right.
5 years. That
Right.
is fine. Like I'll be driving my car in the parking lot till the wheels fall off. And I can't wait for that day. Like I have, I think, one more year of car payments, and
Mhm.
then maybe I can go 3 or 4 more years, no car payment at all,
Yeah,
until I go on to the next. So, just making sure those decisions align with how much you want to save in life to get to where you want to be is huge.
absolutely. Awesome. So, mortgages, people do always ask, how much of your income should be part of your mortgage payment. Um, Again, like, so this is just a generality here, like 30 to 35% of your income. I would say, it's got to depend on your specific situation. But I would not have more than 30 to 35% of your income going toward your mortgage. So, you want to make sure you're shopping for the right house, when that time comes. Too much house, to kind of keep up with the Joneses or whatever the case may be. The prices of real estate now are insane. And with mortgage interest rates where they're at, it becomes even more expensive. So, kind of get that reality check. I know that's like tough to say and tough to,
It is.
swallow.
Yeah.
But there is a huge effect on, a too big of a mortgage on one's finances. So you definitely want to do that analysis and make sure that, that payment fits into your overall financial plan.
I think too, like people generally when they think of buying a house, they're like, oh, well, it's an asset. I'm building an asset. This
Right.
is, this is savings. And it's like the first 5, 7 years of a mortgage, you might as well be renting because you're just paying interest to the bank.
Right.
And so if you're not sure that you're going to be somewhere long term and you want to hold off and see what happens with the market and the rates and all that,
Hmm.
that's okay. And from the way I look at it is like my primary residence is not an investment.
Right.
My primary residence is where I live and where my family is
Hmm.
comfortable and we can raise the kids kind of thing. I'm not going to use my primary residence as income in retirement. So
Right.
it's not like I could just take that asset unless I plan on selling it,
Hmm.
and get income out of it. So you just want to be careful. Like we see a lot, I think, at this stage of life, a
Yeah.
lot of the renovations, like every
Yeah.
time there's free money or a bonus or all that, oh, I got to do this house project.
Right.
Be careful. That primary, sure, maybe you can sell it one day for more than what you paid and what you put into it. That's great.
Hmm.
But making sure that what you're actually putting into it is not what your savings is important.
Absolutely.
So I would just say, to tie things up, I think that's all we
Yeah.
have for you guys tonight.
Yeah.
Thanks so much for coming. Whoever invited you, make sure you reach out to them, and check in with them. And I'm sure they can help you a ton in terms of any of these topics and others. But we appreciate you being here and tuning in.
Absolutely.
Best of luck to you in your relationship, your family as it grows, and hopefully, this will open your eyes to a few good decisions, a few things that you want to make sure you check in on as a married couple. So, thanks so much. Have a good one.
Have a good night.